Hi, my name's Allan Madan. I'm a chartered accountant and a tax expert in the Toronto, Oakville, and Mississauga regions of Ontario, Canada. The topic of today's video is the tax implications on divorce and separation. So if you're caught by one of these situations, it's really important that you watch. Tax tip number 1. Factor in the after-tax cost of the assets when splitting them up upon separation or divorce. Let's take a look at a practical example. Assume that the husband has $300,000 of RRSPs and $100,000 of non-registered investments. The husband and wife also jointly own the family home, which has a fair market value of $400,000. It would be very wise for the wife to claim for the family home, because the principal residence exemption would dictate that if the home were sold, the wife would receive $400,000 tax-free, free and clear. On the other hand, if the husband were to keep the RRSPs and the non-registered investments, upon the sale of the RRSPs, the amount sold would be included in the husband's income, and upon the sale of the non-registered investments, the amount sold would be subject to capital gains tax. So when splitting up family assets, it's important to look at the after-tax cost of those assets. Tip number 2. Don't cash in RRSPs when subdividing assets. There's a special rule in the Income Tax Act that allows one spouse to transfer his or her RRSPs to the other spouse upon separation or divorce. This is to make an equalization payment. On the other hand, if you didn't take advantage of this special tax rule, what would end up happening is one spouse may have to cash in his RRSPs or her RRSPs, include that in income, and pay a heck of a lot of tax. Tax tip number 3. Update the Canada Revenue Agency on your single status after you've been separated or divorced for a while. The reason being is that the amount of Canada Child Tax benefit that you receive for your children is based on family income, the combined income of you and your spouse. If you're separated and divorced, your spouse's income is taken out of the equation and only your income is factored into the calculation for the amount of Canada Child Tax benefit you receive. So it's more likely you'll receive an increased amount of Canada Child Tax benefit by claiming yourself as single. You can claim a single status only 11 months after the month of separation or divorce. So there is a waiting period. Tax tip number 4. If you and your spouse own more than one property, for example, a principal residence, a home in which you live, and a cottage, consider giving the house to one of the spouses and the cottage to the other spouse. The reason being is that each of you separately can claim the principal residence exemption, which means that there's no tax on the sale of the cottage and no tax on the sale of the home. Poor tax planning would dictate that one spouse kept both the house and cottage, which would mean that that spouse could only claim the principal residence exemption on one of the two properties, which is not a really good after-tax result. Tax tip number 5. If you have to pay legal fees to your lawyer to collect support payments, those legal fees are tax deductible on your personal return. Legal fees paid to a lawyer to draft your separation agreement or for disputes going back and forth on the split up of family assets are not tax deductible. Tax tip number 6. If you have more than one child and you and your spouse have joint custody of the children based on the separation agreement, consider structuring the separation agreement such that you will be claiming the eligible dependent tax credit for one child and your spouse will be claiming the eligible dependent tax credit for the other child. In this particular situation, the spouse may only be able to pay child support for one of the two children, so it does have its disadvantages. If you found this video useful, I encourage you to access my website, http://madanca.com, which is shown at the bottom of this video, or get access to my free report, 20 Tax Secrets on How to Beat the Tax Man, the URL for which is shown at the end of this video. So go ahead, visit my website, get access to your free report, and save yourself a ton in taxes. Thanks for watching.